Thanks, Rob. So just to give you a brief background, so I grew up in India but never worked in India. And till last month, was working for Alibaba and Ant Financial. So I'm an Indian who never worked in India and worked more for Chinese. So I sit in the middle of both groups. So I'll call upon my fellow panelists, Amit from Let's Talk Payments. Let's Talk Payments is the tech crunch for fintech. He's based out of India and has been running this for several years now. Welcome, Amit. I'd like to welcome Jonathan from Red Pulse. It's a marketing intelligence firm based out of China. The coolest thing they do is 2-paragraph summary on everything cool which happens in China. So if you want a brief on TLDR on what's happening in China, hook him up. I'd like to invite Himangi she was working for Yes Bank earlier and now working for an Indian startup called Active AI to bring in perspective of what's happening in the Indian startup landscape and in the financial services as well. And lastly, Zanan from Capronacia, run a consulting firm out of China, specializing in Asia, interest in helping startups and experienced companies figuring out Asia. So if you are first time to Asia and want to figure out different stuff, he's the guy. So guys, please have a seat.
Where do you want to sit?
Your call. I'll take the last one.
Okay.
So we started talking about, before we go into the introduction, I'll just give you a brief on everyone on what we're going to talk about. There's so much competition between India, China, and the Chinese dragon, Indian tiger. But from where I look at personally is, these are the 2 largest markets, and together they control something about 45% of population in the market. And that is huge. So this is the era where East will have a significant, I would say, balancing power to the West. So it would be great now to look at what are different people in the East looking at what's happening inside the East. So because we have less time because of other sessions, I'll just jump right into the panel. So all of us have looked at what's Alipay and WeChat Pay. One of the key questions I've always been thinking about, can there ever be another Alipay and WeChat Pay ever in the world? They have absolute dominance over the market. So I'd like to ask our Chinese experts, what happened in China that there was almost an oligopoly? Was this the communist culture? Was this the kind of closed economy? Or was it the Chinese prefer less options? Or was it 2 awesome managers in these companies? What made these 2 things happen?
Yeah, I think I can take this one. So we've been tracking what's been taking place with Alipay and WeChat Pay for quite some time now. And I think quite simply, in order to have a successful payment platform, you need to have scale. And to get scale, you need to invest in a platform that is able to garner the hundreds of millions of users that both WeChat Pay and Alipay have. And it just so happens that they have at the ready all of those users already. So for Alipay, of course, they have Taobao, they have Alibaba. That's essentially supporting the use of Alipay. And then conversely, on the WeChat Pay side, they have WeChat. And so WeChat has 700 million customers, of which 200 million are already connected to their bank cards. So that's a built-in network that they can already leverage in building out their payment platforms.
Zanan, what do you think?
Yeah, I think in addition to what Jonathan was saying, a key part of this whole equation is trust as well. I mean, if you look at the foundation of Alipay, it was designed to fulfill the role of trust in e-commerce transactions by providing escrow services. And so I think that, if I looked at the key elements that enabled these platforms, I think those are 2 of the aspects. I think, I've been in China for just over a decade now and following, what's been happening in the space. I think, as China fintech has gotten more awareness over the past couple of years, I think one of the things, you talked about, could this happen in other markets? And I think there's a little bit too much focus on regulatory barriers that prevented foreign companies from doing what Ant Financial and Tencent have done. If you look at the origins of these companies, if you look at the licensing regime around payments, if you look at what foreign companies that have tried to come into the market have done, largely the failure of foreign companies to gain traction is their own fault. There are not a lot of the things that have happened in the market in the way that Alipay and Tencent have grown their payments business. There's nothing about that that's restricted for foreign companies. There are the payments licenses. You have to have a local company to get into the payment space. But in theory, Tencent is overseas listed, Baidu is overseas listed. Alipay, although it's been spun out into Ant Financial, may list in Hong Kong. I mean, these are fundamentally foreign companies. I mean, a good example is earlier today in Dianrong. And I think with fintech in China in particular, we look at these barriers, but they're more perceived barriers. And I think a lot is down to execution. I mean, Uber is a great example. Uber completely misread and misjudged the market and suffered for it. And that's an example of a company that faced no regulatory concerns whatsoever. So I think, the execution, as Jonathan pointed out, the scale that these companies had, the way they were able to understand the Chinese consumer and really adapt to it has been critical for their success. And I think it's kind of the same thing we're seeing in India now with Paytm and PayU and these mobile wallets. I mean, you have the advantage of demonetization that, advantage for certainly for digital payment companies, but, I think it's catering to local needs. And that's something that these Chinese companies have done very well.
Which, by the way, if everyone isn't aware, Ant Financial actually acquired a portion of Paytm not too long ago. So they are expanding quite aggressively beyond China's borders.
So from what I understand, you guys are saying that it's scale and trust and ability to manage. So I'd love to understand from the Indian team that what do you think that can happen in India, considering in China they had a source of capital and a source of user from the parent companies. So all the big payment companies in China had a large amount of capital with limited accountability because their parent companies were the ones funding, and they would give them a few 100 million users. There is no such company which is giving that to the tier 1 Indian payment companies, and all of these are funded by foreign investors. So there is not like a stable pool of money. You have to go to investors every few months. So based on that, do you think it can happen in India?
So to both your questions, I think they're connected. Probably India will not see an Alipay. And we are here predicting the future again. So don't know what will happen, but I think trust, as Zenon mentioned, Alibaba took like a decade or more to establish the trust, and then Alipay was able to ride on that. I think Paytm is a relatively newer brand, and it will take them a lot of time to establish that kind of a trust. I think in India, the role of Alipay will be played by some of the new private banks. So for example, a lot of these private banks have come into play in the last 10, 15 years. They have access to most of the APIs that I was talking about earlier in the session, be it authentication, Aadhaar, UPI, all of this, the whole India stack is available as public goods to these banks. And some of these private banks are actually building some really good experiences, and both in terms of market capitalization as well as in terms of number of users and the market share, they are kind of beating the public sector banks left, right, and center. So I would say that maybe we'll not see an Alipay, but we'll see a lot of innovation also coming from private banks. And to your other point, all the money that is going into these private banks in terms of investment is all money from local markets, and they have a very long-term vision of how they want to build financial services experience in India and cater to the Indian market.
So I would say you're short on the wallets, which are the cake of the town?
So it's very early days for the wallets, I would say. I think Paytm is one of the players apart from MobiKwik which has grown in terms of volumes, but certainly not to the extent of Alipay or Tencent as of now.
So I totally agree with what Amit was saying. And just to add to what he was saying, yes, India being a fragmented market, there will be innovations coming from small companies also. So it's not going to be Alipay or any big brands who is going to dominate the industry. But I think small players getting together, maybe a collaborative approach would be getting them to the level of Alipay. And secondly, yes, I also agree that the local investments have been more, because it will also help because they understand the local market well, and it's easier to scale up in that kind of a scenario. So I kind of agree, yeah.
Okay, so you guys believe that it's the private banks in India would be a bigger player in the long term than the wallets which are somewhere in the middle of the
Yes.
thing?
Yes.
Okay, so coming back to that point you mentioned about UPI. So just for the rest of that, so Indian government created like a common infrastructure, all this India Stack and all these APIs available so that all the financial services players can use it. Compared to that, so India is not a socialist communist country. The government took it and built all the public infrastructure for the public good. Compared to China, where the government stayed out of it and let the private players figure it out, build their direct APIs, direct infrastructure, and let the private market forces play. So what I want to understand from the Chinese representatives per se would be, can you help me understand how does this communism work where you have private players driving the whole economics while in a not so communist country, there's government driving all of that. Do you think that difference in approach of the governments is a key factor in what's happening in the markets now?
Absolutely. In fact, for those that have visited China recently, I think you'll very quickly come to realize that China probably is more market-driven than a lot of other countries out there. You know, you just look at how capital markets have flourished so quickly and to a very large size just in the last 2 decades. It's a very good demonstration of that. And more specific to the development of fintech, what's also quite helpful, in addition to having scale and having trust, is also having a cooperative regulator. So one of the things that we've come to realize when we're looking at financial markets in China is that there is a tendency for these regulators to be fully aware of the advent, the expansion of these new industries, such as P2P lending, such as mobile payments, but allow a pretty hands-off sort of approach to having those markets develop. And the same is true for mobile payments.
Is that good? We had
It's-
Easy Bao and all of that.
Very true. In some cases, it's not good because there's a very real risk of some of these markets becoming a runaway train. In which case, the regulators do step in pretty quickly and implement some regulations to manage that better. And the same is true for mobile payments because up until now, relatively speaking, there have been few restrictions, few restrictions on foreign players in the market, as well as few restrictions on the actual protocol that's used. You just mentioned UPI and API, but that's changing. So just last Friday, we saw PBOC issuing a new policy that states that third-party payment platforms, namely WeChat Pay and Alipay, can no longer use the reserves for their own financial gain. So starting on April 17th, they'll have to start depositing 20% of all the reserves from these payments, from these transactions, into a PBOC-recognized commercial bank. And that commercial bank will not be providing a yield on these deposits, which in effect removes a pretty large revenue stream for Alipay and WeChat Pay. So regulators are stepping in, and they are ensuring that there is enough oversight to protect consumers, protect the financial system.
So you're saying the regulators are becoming active and that's going to slow down the party?
That's right. They let the party go for a while, and then if things run into trouble, then they'll step in.
Party's got wild now.
Yeah.
I think to that point, we have discussed this a few times that, it was very, in China, some of the banks grew up to be some of the largest banks in the world. At the same time, BATs grew their technology capability so much. So I think it was good to sit on the sidelines as a regulator or as a government and look at, let these guys grow, build Alipay, Tencent and all that. And then when they became so big and it started creating other issues, for example, the futures trading was, I think curbed back in August 2015, and as well as some of the fake products on Taobao or, Alibaba. I think in that scenario, once you grow to that extent, you become big, it's very visible, and you
Too big
start
to handle?
Yeah, and then the regulator comes and then decides that, okay, let's start, thinking about how do you regulate that. The same thing happened with Ubao as well, I think.
So just to add to it, what best could happen to you where the regulators are by your side and you're getting a capital from global market? So that's the best scenario to be in. I think the fintech startups in India are in that situation today. So that's the best thing I would say.
So what I'm trying to see here is Indian folks are feeling we get the free money from the global world, our regulators build up all the stuff for us, and we can do whatever, while the Chinese regulator is trying to slow down the piece. Am I right to summarize it this way?
Yeah, I think, I mean, you pointed to this at the beginning of the question. I think, you know, as you can probably tell from my face, I'm not Chinese, and from my accent that I'm American. And so when I first came to China about 12 years ago, I had just finished my MBA and, you know, American free market thinker, capitalist. And now, well, you could argue what the US is going to starting on Friday, but, you know, predominantly still a democracy. When I got to China, I thought, yeah, I thought you'd appreciate that. When I first got there, I thought, oh, this is ridiculous. I mean, the market should be open. This should be a free market economy. You know, the foreign banks should come in. You know, the market should be much more open. And what I realized over time is that the closed market nature, you know, keeping the foreign banks at bay initially and then gradually letting them in, did help the market to grow in a stable manner. And I think the other benefit that style of government brings is consistency across the board. And I'd love to hear from the Indian colleagues here, but the thing that strikes me is that, you know, one of the challenges of democracy and one of the challenges from India at a macro level is the not the chaos, but the word that I'm looking for is, but the democracy brings challenges with it. And so you have different systems and different governments and different priorities, whereas China is kind of pushed all in one direction. So it made it much easier for these companies to set up their own payments infrastructure because they had a reasonable view that this is the way it was going to work across the entire country. And with generally one large regulator and you know, the government and the regulatory bodies, if it works at the national level, it's going to work at the provincial level and work at the local level, which I think that might be a challenge in India a little bit more, is that the payment infrastructure may vary, the needs of the regulators and the governments in particular states might vary as well. I'd love to hear about that, but I think that's one advantage that China had, is that, you know, when you have the entire economy moving in the right, or moving in, I won't say the right direction, but moving in one direction, supported by the regulators and the government, it makes it a lot easier to innovate as a private enterprise because you kind of see where the path is going. Whereas I guess in India, you know, maybe wait and see and let the government build the infrastructure for you is a better argument for then building on top of that, because then you're sure, okay, it's going to be UPI and it's going to go in that direction.
So I think what democracy is doing to India, especially in the fintech space, is that we have state governments and chief ministers from state governments launching fintech hubs and fintech towers and all of that. We have a mobile wallet now, not just from you know, from the private players and e-commerce companies and you know, the banking consortium, but also from the government. It's called BHIM app, which was launched very recently. So to your point, there's a lot of mess around when anybody can actually do anything in a democracy. And I think one thing which happened in India, which is very interesting, is that some visionary tech leaders like Nandan Nilekani, they thought about it in a very long term, and they said that, can we create the infrastructure that at least at that level, or rather I should say 2-3 layers of it, it's very consistent and standard. And then over and above it, people can create experiences which might be different, and then the market will decide which ones are better. So they created the authentication system called Aadhaar, and they created UPI and some of these standard elements. I think that was interesting.
So if I look at it that way, so the Chinese government said that, okay, we will play the real free market way and we will stay out and we'll drive it, and India behaved like a centralized planned economy to build this. So let me ask this. So if the Indians would like to have one thing which the Chinese have for supporting their industry, what would that be? And Zanand, the same question is going to come from you for the other side. So think of it while the Indians give their answer. One thing which you would like from China to come to India.
I would say the consumer adoption of digital services, or in this case, the fintech services. If the adoption takes off like the way it took off in China, I think that's one thing that I would ask for India.
But adoption doesn't come, you dream for it. So in China, there are 5 billion CUP cards. So when Alipay and WeChat Pay has 200 million, that means that 200 million of 5 billion cards in circulation. So the consumer adoption happened because the traditional banking infrastructure was so pervasive, they had such deep penetration. So for Indians to wish for that level of adoption overnight without having spent that amount of time, money, and effort to get that banking penetration would be slightly wishful thinking.
Yeah, you asked me for one thing and I kind of answered that. And you can wish anything if you're asked like what do you want to wish. I think it's a loaded. Obviously, it's a loaded statement. It has many elements to it. I think our Prime Minister tried doing something to help that out by, sort of starting demonetization. It's a very debatable topic, though, whether it will help in the long term, short term. But I think I recently went to a tier 4 town in India, and I went to this shop, which was like, I could never ever imagine that this guy will accept a Paytm for, like 10 rupees. And this change has happened in the last 2-3 months. I think in the short term, some of that consumer adoption was seen due to demonetization. But there could be something, else which has to be done. But I would rather, pass it on to the other guys to answer.
So one thing which I would like to say is the merchant acceptability. So that's what I see that in Indian market, that it takes time for a merchant to accept any new technology or a product. Whereas in China, you see quite a lot of things happening from the merchant side first and the consumer adopting to it very fast. So I think that would be one.
Just more of from the user and the merchant side, they being open to new stuff. So
Yes.
you believe that Indian customers and merchants are not so open to the new
So
solutions.
it's kind of sometimes a wait and watch situation, and that loses out on the time and market sometimes.
So before you answer, a quick question for you. Is it that the Chinese are desperate for trying out the new solutions, or is it that it took time and then they did it? Or what happened? Like the Chinese were waiting for something to happen and they're like, we want the new solution and let's get that at first day when it launches.
Yeah, well, I mean, a couple of thoughts around that. I mean, if you, going back to the Alipay example again, I mean, that was a very small niche solution initially to solve the problem in e-commerce. And then they built on top of that Yuebao and now financial product distribution. So you've gone from this attitude of, I think in the West, and maybe Brett will talk about this during his talk, but I'm sure he'll mention at least disruption, blockchain. I won't give away all his keywords, but he'll mention disruption at some point. And in the West, we at least once, yeah. Yeah, it's a drinking game, so you can drink every time he says disruption. In the West, we have a tendency to focus on disruption quite a bit. And I think what we've seen in China is these small niche players that have expanded beyond that. And I think, when you look at Alipay, it started off as a payment platform to solve the issue of trust in e-commerce transactions. Started seeing people leave money on their Alipay wallet, so they put a wealth management product on top of that. Started seeing increased demand for wealth management, brought in other wealth management products. One of the latest things we went down to Hangzhou a couple weeks ago and met with Ant Financial, and we were talking about this report that we're working on. And another thing they have is Ant Forest. And so you basically, I don't know if you've seen this yet, Jonathan, but you can basically claim carbon credits as part of the Alipay app. And so the scope of what these guys are looking for, it's not clear which way it's going, but the biggest disruption anywhere in the financial industry is Ant Financial and everything that's happened in China from these very humble beginnings as a small platform. Now, the flip side of that is actually what I'd kind of like from India is a little bit more openness in the market, because if you look at the digital payment space, 95% is controlled by Tencent and Alipay. And there's not a large startup fintech ecosystem there, because the smaller players in many of these spaces don't really have that opportunity. Now, that being said, in P2P, we've seen tremendous growth in P2P and lending in this space, but I think a little bit more around the creativity and the startup scene around fintech would be quite interesting in China as well.
So Jonathan, what would you like to borrow from India?
It's very similar to what Zenon just said. So you kind of stole my thought right out of my head there. But it's essentially a bit more competition. So it sounds as if in India there's quite a few players dotted across the entire country that are
40
all
registered wallets.
Right, yeah. And specific to China, however, we still have these two players, Alipay and WeChat Pay, that essentially own the entire space. And I think competition breeds innovation. Right? Competition breeds these new features that ultimately benefits the end consumer and benefits the development of the market. And when we have these two players that continue to dominate the space, they're continuing to innovate and create new add-on features to their platform in the effort to build new revenue streams. But at the same time, you can't help but wonder if there was a third player, if there was a fourth player that was spreading out the market share a little bit more evenly, you might see even more come out from these other firms, rather than just having these two juggernauts go at it all the time.
What if you just wanted a new design for, as you woke up, you wanted a new color, a new design? I was watching one of the gentlemen talking about how they redesigned this, the banking side. I think with just 2 or 3 players, I mean, one day you get up and you just want to see a new design, you don't have that option.
It's a fair point. You know, if orange isn't your color, then I guess, you know, Alibaba isn't really going to be the app for you, right? If green isn't your color, then maybe WeChat isn't your favorite app. Yeah, somebody maybe should come out with a red one or a purple one.
So the Indians want the attitude of Chinese customers, and the Chinese want the Indian competition. So now I have that 5 minutes left. I'll open for 2 audience questions. Anyone has any question? Else I'll continue with my questions. Okay, there's a hand in the back.
Are we going over there? So great panel, a lot of expertise on the stage. Do you think, so China, I think we've discussed, is a little bit, I mean, it's closed off to foreign competition, let's be honest. So, you know, one of the factors that's allowed for the growth of some of these domestic players is simply that they haven't had to compete for much of this market share. And there are plenty of other reasons as well. I think India is considerably more open in that regard, although not entirely, of course. But do you see, like pulling back from India and China and thinking about folks like Amazon or, you know, Facebook or Apple or whoever else, is it likely that as the big Chinese players go international, and of course we've seen India as a big stepping stone in that, do we think India might in fact become a battleground between some of the big China players and perhaps some of the European or US ones, and what might that look like?
That's a very interesting question and I would not have expected anything less from you, James. So I think as far as financial services industry is concerned, currently, I think private banks is where I would place the bet. And, you know, Yes Bank, Kotak, some of these banks are doing some amazing work. Also, DBS now in the form of DigiBank, they're seeing some really good traction to begin with. Back to your point, I think at some stage that will start playing out. Amazon is putting a lot of dollars in India in the payment space and, you know, trying to figure out what they can do, especially given that all the entire India stack is available as public goods to anybody. So it does not differentiate between an Amazon or a PhonePe or anything else. So it will be interesting how it pans out, but currently my bet will be on private banks.
Any other question? I can see his hand in the back. Rob, can we get a mic there? Yep. Thank you, Rob.
Hi. It's not a question, but just an observation. You did mention about RuPay and NPCI as a government-related initiative. If you look at the ownership of RuPay, 40% of it belongs to the private banks. And the private banks are HSBC, Citibank, HDFC, and ICICI. So I just wanted to make that observation coming from India. I thought I'll just state this. So basically the objective of this RuPay was to build a digital railroad. Pretty much like when you have state highways and the national highways, you want to provide a unified interface. In a similar fashion, this digital railroad was established across the country, promoted by 6 nationalized banks and 4 private banks. Of course, they are subordinated to the government objectives. Just wanted to clarify
so
that.
just to correct a little bit of semantics there. So it was basically National Payment Council of India, which was set by 10 banks. Each one of them had put like 10 crore rupees, and so, you know, this 100 crores was utilized to build technology for the banks. And because they realized that there was a gap in the market, and then somebody had to do it, and so they formed a consortium and they started building that. And RuPay is a network from NPCI, which was actually originally built with the help of Discover, and pretty much aimed at building a UnionPay kind of a thing, which will compete against Visa and MasterCard.
So it was an industry initiative, but so unlike in China where every player built their own fully rails, here the players came together to make a consortium kind of thing to build rails, and these are these available for all the banks, right? So
most of the technology that is being built by this NPCI is available to everyone in the market, all the banks.
So no other than these 10 banks, one can also use this.
Yes.
Okay. So I have just last 1 minute. Any last question?
I could make one point.
Please.
About, I mean, James mentioned the battleground. I think both of these countries, what's happening in these countries is incredible. And I think we're only at the tip. I mean, we talk about all of these things, and a lot of these products and services are focused on the tier 1 and tier 2 cities, certainly in China, and I would assume in India as well. There are millions of people in these countries, especially I'll speak to China on this, there are millions of people in China that are not in the major cities. And what these companies are doing to include these people is really incredible. In China, the bugbear of the Chinese government has been financial inclusion for decades. I've heard many different initiatives over the 10 years that I've been there. Alipay has 800 million people on their platform, of which about a third are rural users. So these are, they call them farmers, but essentially it means rural users. 450 million and 300 of which are rural users. If you look at the usage of these platforms, the mobile phone is the primary usage of mobile payments in Tibet. That's actually the province in China where mobile payments are used the most as a percentage, not as overall transaction volume. With smartphone penetration at 72% in China, the opportunities to move beyond just what we're talking about here in terms of peer-to-peer lending and e-commerce and financial inclusion are really incredible. And I think it's probably the same thing that's happening in India. When you speak to an audience here in Hong Kong, you don't need to reiterate these two facts too much. But I would encourage you, if you're not paying attention to what's happening in these places, especially outside of the headline numbers and the headline facts, you really should. Because that's beyond what's going to make everybody in this room money. That's what's going to change people's lives. And that's what we're seeing on a daily basis in China, certainly enabled by digital payments and digital finance.
Okay, great. Thank you, everyone. Thank you so much for sharing. Okay, sorry, I left.
I just had one question and one observation. So is there a scope in China market, you guys can help us understand, where Indian or any global companies can come in? Because all we spoke about from China market is Alipay and WeChat. So is there anything?
Yeah, I can add a few comments there. So there has been obviously a lot of interest in developing the China market. You know, if you're a global institution, you look around and you figure out where are your growth markets, and for most, if not all of them, they view China as their next go-to market if they aren't already there already. And the difficulty, however, is that for most industries, if financial or corporates in general are allowed into those industries, you can only do so through a minority stake in a joint venture. And so the asset management space is a perfect example of that, where right now global institutions can have at most a 49% stake in a onshore manager. And that's changing, however. You know, just this year we're starting to see, just the past few weeks actually, starting to see some regulations being pushed through that liberalizes that restriction, and the same goes for some of these other industries. Now there's still a few, such as information, such as defense, and others that are pretty, restricted, right? They're hands off, you can't go into those industries, but it is all moving in the right direction, I would say. And in that State Council, in the way in which they normally go about this, is starting out with these directives from top and then trickling it downwards into the smaller and subsequent exchanges, regulators, and so on and so forth. So it's moving towards that direction. We're not there yet in terms of full open inclusiveness for foreign participation in these industries, but we're making good progress.
Okay, thanks.
Great. Thank you so much. Thanks so much for sharing your insights about both India and China. Thank you, Rob, for having us here.